Welcome back to The Price of Business. I'm your host, Kevin Price, talking to you about you and your business. Going to chat for a little bit with our friend Jordan Goodman. He's been on the program several times over the years, and he's with his website is moneyanswers.com. And if you hadn't gathered by the name of that website, he is a money guy. He can talk very authoritatively about what's happening on the business front. And we love to have him on the program. You've seen him on CNN, on Fox News, Fox Business, CNBC, many other channels, and as well as on The Price of Business. And good to talk to you again, Jordan. How are you?
Great to be with you, Kevin.
Glad to have you. Hey, tell us a little bit about your recent experiences in China before we get into the presidential debates.
In July, I was in China for 2 weeks, 1 week in Beijing, 1 week in Shanghai. Took the bullet train between the two of them. Massive growth going on there as far as buildings. Everywhere you look, Kevin, there are huge apartment buildings, office buildings, shopping centers going up all over the place. They already have a lot of what are called ghost cities, which is places that have been built that nobody's in, and they're building more, like a lot more.
Okay, are the purpose of those cities to move people from rural areas eventually and to take advantage?
Well, kind of, but people can't afford them. I mean, that's nice in theory. But these apartments are more than people can afford. So
are they building them in order to keep...
and go right into a fancy apartment building.
Are they building them in order to keep the economy busy?
That's correct. That's what they're doing. So here's the way it works in China. In the United States, we have property taxes. You might not like them, but that's a kind of a stable source of income for the municipalities. They do not have property taxes in China. Okay, so here's what they do. They buy land from peasants who get money they've never seen before in their life, so they're happy. The municipalities then resell that land to developers who build apartment buildings, office buildings, shopping centers, and so on, whether occupied or not. That's the money that supports local municipalities. Is that a crazy way to run a railroad or not?
It sounds like it can only be done through the coercion of taxation.
Exactly. That's what happens.
And debt. I'm assuming some debt's involved as well.
Huge amount of debt. Huge amount of debt. We were in Nanjing. They have 400 times the debt of their annual income. I mean, it's just crazy. They've taken on a huge amount of debt, particularly the local municipalities, to handle all this. So, to me, it's an enormous bubble that's going to pop and have all kinds of impacts here in the U.S. It already is to some extent.
Yeah, and I'm looking online. I'm seeing some of the photos. They literally look like ghost towns. Beautiful, beautiful, modern, incredibly modern ghost towns.
When I was going, just to give you a sense, Dave, when I was taking the train, the so-called bullet train from Beijing to Shanghai, it's about 5.5 hours. Beautiful train, went about 250 miles an hour, very smooth. But as you're looking out the window, you'll see a city, and then you'll see rice paddies and forests and farms and all. In the middle of a farm somewhere are 5 50-story buildings going up with cranes, apartment buildings, in the middle of nowhere. It's like, who's going to live there? Who's going to be able to afford this kind of thing? And one after another for 5 hours. And that's what I could see from the train. This is going on throughout the entire country. It's just crazy.
Yeah, I see this one. It looks like they have a Chinese equivalent of an Eiffel Tower.
Yeah, that's right. Yeah, there was a place in Shanghai that literally the guy had done a full-scale replica of the White House, where Obama is, and that's where he lives. There's a lot of wealth in China as well, but a lot of it does not filter down. There's something called the GG Index, which is the index of income inequality in the world. China is much higher on that index. You think we have income inequality in the United States. China is much greater income inequality because the top people are doing really, 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 really well.
Yeah, well, the reality is that totalitarian regimes, and the more totalitarian, even those that aren't fully totalitarian, always have a bigger wealth gap. Always have that.
And even more so because the economy has grown so much the last few years. A lot of wealth has been created. And every Chinese in particular, we spoke to some millionaires and billionaires, every one of them wants to get their money out of China because they don't know what whim the government's going to have next. And if they, all of a sudden, everything's going fine and the wind changes, they don't want to be caught without the money out of the country. So as well as they're doing, everyone there wants to get some money out of the country.
It's interesting, their tendency to copy technology, and to steal intellectual property. It's interesting to see that they, seem to like to make cities that are reflective of other parts of the world. I see one here that looks like a Northern European city.
Correct, and there's one that they did a replica of New York City, where there's a Chrysler Building and a World Trade Center and a Grand Central and all of that. There's a replica of that as well. It's crazy. And talk about intellectual property. There's something called the Silk Market I went into in Beijing. 6 stories of stores, like maybe 500 stores in there, something like that. There's an entire floor of just Rolex watches, basically, all fake. I got, just for a friend, I got a Rolex watch encrusted in diamonds for $30. When we got back, we looked it up on the Rolex website. The actual price for the real Rolex is $12,000, but it looks perfectly the same. So, yeah, they're not big believers in intellectual property, I must say.
No, not big believers in intellectual property. Well put. Well, it's difficult to make the transition, but I do want to talk a little bit, and we do have a little extra time, so I want to get into it.
Sure.
Let's talk a little bit about the 2016 elections. We had our first debate last week on Fox News, and what was interesting about that debate is Carly Fiorina seemed like the strongest out of all the candidates. It'd be interesting with all this chat about, a business person, a.k.a. Donald Trump, rising to the top. Well, I tell you, Carly really was impressive.
Yeah, I think so. In order for the Republicans to win, I think they've got to have somebody in the somewhat moderate center. You just cannot have kind of flaming right-wing people like Ted Cruz and Rand Paul, and they're just libertarians. It's too much. It's just, I think the average American is not going to go, and I would put Trump in that category as well. He's flashing now, but I think he's going to kind of wear thin.
And he's not an ideological extremist. He's a megalomaniac.
Well, he is, but he's also an ideological extremist. He's very protectionist, for example. He would start a trade war with Mexico and China, among other kinds of wars as well. That's not what we need for economic growth, is to have a trade war,
Oh, that's interesting. Yeah, I guess that is a possibility. And
so I mean, the moderates, now I was impressed with Kasich of Ohio, Scott Walker, and Jeb Bush. I think those are the kind of 3 relatively moderate people as things go.
Yeah, and of those 3, the only one I like is Scott Walker. And I don't consider him very moderate, to be honest with you. I think he has courage and very conservative positions on the, dealing with unions have been incredibly impressive.
Boy, with the unions on a national basis, can you imagine all the unions would really get excited about Scott Walker?
They really would.
And so on. So it's going to be a very polarizing election, unfortunately. What we need in this country is to come together, and unfortunately we seem to be more and more polarized. Each election seems to be, we're not getting it. And you're seeing it in the markets. I mean, here you have that unemployment report that came out last week, 215,000 new jobs created, about what people expected. Everybody's saying now the Federal Reserve is going to raise rates come September because, the economy is growing and they're worried about wage pressures. I think it's crazy, Kevin. I really think you do not want to be raising rates when you have all these instabilities around the world. But the Fed's not listening to me. I think they're going to do it. And that's putting downward pressure on stock prices, bond prices, and interest-sensitive vehicles, real estate investment trusts, master limited partnerships, utilities, bonds. They're all going to get hurt in this kind of environment where you're going to have rising interest rates, which I don't think makes sense because we don't have a lot of inflation to attack.
Yeah, but at the same time, how do you continue at $50 billion a month, free money being pumped into the money supply? I mean,
well, that's what's keeping the economy going to some extent. And
boy, it sounds like to me a hangover has got to be in the works.
It is a big hangover, you're right, but I'm not sure we could survive without having the and this is what Wall Street thinks. Every time there's an indication that the Fed's going to raise rates and tighten things up, the stock market falls sharply. Every time they think the Fed's going to keep the party going, the market rises sharply. So we're very much in tune to that. I'll tell you something I'm doing. This might be of help to the listening audience. I put money into what are called commercial mortgage bridge loans. And this is a way of getting 6% yield over 1 year, very, very safely. You get monthly checks, and you get your money back at the end of the year. There's a website related to that, commercialmortgagebridgeloans.com.
How much money does it cost to get involved in something like that?
$25,000 is the minimum. And there are no fees, commissions of any kind, no management fees, because the loan originators putting these together charge a spread over the 6%. Maybe they charge a total of 10 to the borrower. They keep 4, you get 6. That means you get 6% on 100% of your money. And they're lending to high-quality commercial real estate projects, hotels, shopping centers, apartment buildings, that cannot get loans. Because of Dodd-Frank, it's very, very difficult for high-quality commercial people to get loans these days for short-term projects, construction, renovation, things like that. So the kind of private market has come in, and offered this as an alternative. So for investors, there's a good way to go to get 6%. Your capital is not going to move up or down. And so a year later, if interest rates have gone up, you would have lost money in bonds or utilities or REITs. Here, you get your principal back, and then you can reinvest at higher rates. So if that, again, that helps some of your listeners, the website to find out more is commercialmortgagebridgeloans.com, and they can always email me at moneyanswers.com about it as well.
And what have you got, a smaller amount that you're working with?
Well, if you have less than $25,000, you could do the interest-sensitive kinds of things. I'm just concerned that if rates keep rising, you're going to keep having more losses. You're going to lose a lot more in principal than you're earning in interest from a REIT, a master limited partnership, utility, something like that. So, I mean, if you don't want to lose your principal, you got to keep it in short-term bond funds or something where you're earning almost nothing these days.
Yeah, it's a tough market, and I guess that's part of the whole symptom of that crazy pumping that we're doing in a stalled economy, really stalled economy. Well, Jordan, I always enjoy having you on. Thank you so much for your time, Jordan Goodman. And by the way, you can learn more about him over at moneyanswers.com. Thank you, sir.
Thanks so much, Kevin. Appreciate it.
When we come back, much more for you. I do want to remind you, best content here does show up over there at usdailyreview.com. While there, like it on Facebook, follow it on Twitter.